Hey traders, it's Asim Trading again. Just want to do a quick video on a topic that I think is important to know. So most of you are probably familiar with Stockbee. If not, look him up. He shares a lot of free content on YouTube, and he also has a website, stockbee.blogspot.com, where he's been putting out content for years and years. But one of the things that he emphasizes, and something I think a lot of traders fail to really comprehend, is understanding the importance of anticipation setups. And he gives some very basic criteria or descriptions of like what a good setup looks like. You know, here's an example of I think it's this page here, how I generate my breakout anticipation screen. He orders this a little bit differently on his page, but if I were to cluster them in kind of groups, you know, you have your uptrend, which is the leg up, the prior leg up. It should be linear and it should be smooth and not volatile. You know, and Christian talks about similar things of having a linear uptrend prior to the pullback. So you have your uptrend and then you have your consolidation. And a lot of the descriptive words that he uses in his list are mainly describing what the pullback should look like. So it should be 3 to 10 days. It should be a series of narrow range bars. You know, you don't have any 4% breakdowns during the pullback, so essentially not any like large selling days in the pullback. You want it to be on low volume and low volatility. So essentially, you're looking for a 3 to 10 day pullback or consolidation that's contracting in volatility, contracting in range, and doesn't have a lot of wide, loose, and sloppy action in it. And there's just some examples from these pages here. You can see you have an orderly leg, you know, a leg up, and you have this nice tight consolidation. The bars are tight and contained and moving sideways. They're not slopping around and all erratic, because you know you can see the difference between this and this. This is nice and tight and contained, and you can kind of see that it's starting to build higher lows here. And same thing here, nice orderly uptrend, and you can see based on these 4% breakout triggers here, it had a lot of nice high volume expansion days on this prior leg up. And then as you get into the pullback, there are a couple of larger range sell-off days initially, but then you can see it tightens up. There's no additional selling within the rest of this contraction. And then this is what the breakout day looks like as it's breaking above this range. This would be day one of a potential breakout move, whereas this one hasn't broken out yet. So this would be kind of the anticipation setup of what might be a breakout soon, whereas this is showing what a breakout looks like on the day of the breakout. And you know, there's mixed opinions on whether you should get in early or you should wait for the breakout. I personally wait for the breakout. It's something that Minervini talks about and something that I've posted recently, where you know getting in early adds a lot of extra risk because you know this thing may never break out at all. It might just fall through the bottom of the pattern here and never even break out. So you know, I personally wait for the breakout. Most of what I trade are day one breakouts like this, where it's breaking above a range, and this is the first day that it's pushing out of that range. So again, you have an uptrend that's linear, you know, a strong linear uptrend, and then you have some sort of consolidation or pullback that has nice, tight, orderly price action. And then the other thing he talks about is not up 3 days in a row. So I just posted recently, and I basically suggested that if you just took this criteria here and this criteria here, that on most days you can eliminate most stocks because they don't meet one of these criteria. They're either not in the midst of a 3 to 10 day sort of tight price action consolidation, or they're already up 2, 3, 4, 5 days in a row, or you know some series of up days over the last 3 to 5 days, meaning that they're not on day one coming out of one of these sort of consolidations. So just using those two very simple contextual indicators, most things are going to get eliminated. You know, and we can demonstrate that pretty quickly. So what I'm going to do is I'm just going to take my generic 80 Express and 80 Extender scans. I'm just going to flag all the stocks in here. And then for shits and giggles, I'll even add this 80 Express weekly in there because you can see there's a couple that are a little bit different. So I'm going to flag all these. So we end up with, what is that, 94 stocks. And again, just using these two basic criteria from Stockbee. Nothing overly complicated. It's just understanding what you're looking for. You're looking for a consolidation that's tight, orderly, volatility and volume are contracting, and then it's not up 3 days in a row. So just keep that in mind as we look through these charts. So I'm just going to generically start at the top, and we'll just see. You can see it's already up several days in a row. Yeah, this is a pause day, but it's like like this would have been the ideal entry here, not 3 or 4 days later. So kick it out. This one's not looking too bad. But if it keeps going down this way, then, so this would be one that I would kind of draw a range on. And, if it breaks out, it breaks out. If not, sayonara. I'll see you later. This one has a really large range selling day. So again, it's not the idea of what Stockbee was talking about here. You don't want any of these big kind of whippy, volatile breakdown days in the midst of this pattern. So like this, I would consider a large range day. So that one I can kick out. This one, again, it already broke out. This day, if you had seen this on Friday, which honestly I did, and then I didn't take this trade because I took other trades instead. Regrettably, I missed about 14 or 15% of upside on that stock, but it is what it is. So this is the kind of tight consolidation that you'd be looking for. It's not up 3 or 4 days in a row. It has a nice 3 to 10 day just tight sideways. And this is day one out of that. So if you caught this in the beginning of the day as it's coming out of this range, then that's a good entry point. But right now, it's kind of already shot past a good entry point, so we're skipping that one. This one's debatable. It's kind of towards the top of this range. It's kind of building out a nice tight area, so you could probably, and you could see the previous flag that I drew out, it actually broke out of that. But if you want to readjust that, maybe this could be an add point if you got in the initial leg. But I would just draw a trend line here, and you can almost think of this like a lid on supply, and then you have the demand. As the demand makes higher lows, you can see the demand is pushing into this lid. So this supply lid, if you want to think of it like that, is kind of pushing things down while the demand continues to increase. And, and ideally you want this thing to pop out of the top of this range with some oomph. So that one looks decent. This one I already had. I added to this one today. But you can see it's already up 2 days in a row. It's at this point, if you aren't in it already off the lows here, then this is probably not a great place to be starting from. Adding a small amount might be okay, but starting probably not. Again, it's already up 3 days in a row. Kick it out. And this is the process you have to walk through. If you bought it on Friday, that's fine. If buying it today, not really. If this thing pulls back for a few more days, then it might offer another entry point, but right now it's not meeting the criteria. Again, so this one, it's not in a point of breaking out yet, but maybe if it breaks above this trend line, that one might be feasible. Again, thing's already up. Pass on it. It's already up. Pass on it. It's already up. Pass on it. As you can see, I'm just going through this really quick, but you can see most things are not going to pass. Even just a basic 2 criteria sort of thought process. It's already up, and if you didn't get it today as it's breaking out, then it's already gone. Move on to something else. It's already up. And you can even use the ADX, or I'm sorry, the ADR versus the intraday Bollinger Band width, just to, you can already see that it's already expanded out beyond anything that's reasonable. It's already up 3 days in a row. Kick it out. Today probably would have been a decent day one entry. I actually got into this thing today, so we'll see how it goes. But this might be a little debatable because it undercut and then reversed here. So getting in on this day, I saw the volume coming in, so that was my entry point coming out of this short little consolidation. Again, this has already been up way too much. Pass on it if you weren't already in. This is already up the 3rd day in a row. If you didn't get on it Friday, then, again, like if you weren't catching these things as they're coming out on the day one of the expansion out of this consolidation, then you're missing the boat. You have to see these things here and anticipate them and then catch them as they're breaking out. If you're seeing these things 2 or 3 days later, then you're kind of missing the point. This one looks pretty decent. If this one can break out of this little flag here, That might be another good one. But you can see it's got a nice, decent range here. You can see the volume is drying up as it moves to the right, through the right side of this supply and demand interplay. This was a good breakout today. So if you got in today, that was fine. Otherwise, you know, I would not have this on an anticipation list because it already broke out. Like, again, if you bought it today, that's fine, but like I would not have this on a list for tomorrow to buy. You know, this one's probably fine as some sort of potential buy if it breaks out of this. I mean, but this, I mean, again, this is kind of loose and sloppy right now. This is not as tight as I would want to see, but I'm not saying it couldn't move higher, but this is not exactly an ideal situation. 3 days up, kick it out. Several days up, kick it out. It's already up, kick it out. It's already up, kick it out. This one's just getting loose and sloppy. So like if this thing tightens up for a few more days, then maybe it'll be decent for a breakout. But you can see it's just kind of slopping around right now. So again, like if you go through these kind of lists daily, like you're going to see these things fairly quickly. Again, like, yes, it's pulling back for a few days, but there's no high or low, there's no flag, there's just nothing there. I mean, you can immediately see from the pattern here, there's just nothing to see. And you can already see from here, this is too wide and loose, it already broke out. Again, if you got this today on the breakout, that's fine. You probably would have been up pretty decently. But right, having it on a watch list for tomorrow, no. Again, this is not really, it's just slopping around. There's not really much of a consolidation. Like this sort of consolidation is something you're looking for. This sort of consolidation is something you're looking for. After it's already run up and it just has this little 2-day stutter step, it's like, no, that's just not what you're looking for. It's already up, kick it out. This one might be decent. You want a watch list if it can manage to break out of this. Doesn't have much of a base to speak of. This one broke out already. Again, like if you had caught this on the breakout, then fine, but this right here is not tradable. This is, you can see it's slopping around. Like you want to see nice, tight action, not this stuff that's all over the place. So that might be a decent one, but again, like it's starting to get sloppy. This is not, like right here when it's kind of nice and tight and you have these white bars indicating below average ranges, it's like, okay, that's fine, but it never actually broke out of this. It went the other direction instead. So you don't want the volatility to increase as the pattern plays out. You want the volatility to decrease as the pattern plays out. So again, like, you know, you can leave this one on your watch list, but for now, it's just like, it's not really the ideal scenario. This one's already broken out. Already broken out. Not have much of a base. Like this would have been a decent base. It's, you know, 4 or 5 days and it's breaking out of that. This is nothing to see here. Again, like have some standards, you know, again, no base. And this is just using two very simple criteria. Is it up 3 or 4 days in a row? Kick it out. If it doesn't have a base, kick it out. It's up too many days, kick it out. It's already up 2 days, kick it out. And this is how you can quickly go through just about any list. And if it's already up, like, kick it out. And if you find yourself missing a lot of trades or missing a lot of these moves, then you have to ask yourself, okay, why wasn't I noticing this several days ago? And, you know, you don't want to sit there and try to trade it after the fact just because you missed it. You want to fix yourself and find these trades beforehand. Again, like I bought this on Friday, but buying it now is just not going to work. Again, it's already extended. Again, we're building a watch list for tomorrow's session. This is not about today's session, you know, so that might be some sort of little minor flag off this gap. But again, like this thing's been running for a while. It looks a bit extended. And the question is, why the hell didn't you get at these previous breakouts and why are you just now looking at it? So, you know, so don't chase things. This one looks sloppy-ish. It's, you know, it was tightening up before and now it's just kind of like just flipping around. So I don't like that one either. Sloppy. Already broke out. Already broke out. It's already extended. I mean, this it's just sloppy. Like you have these large range bars. There's not a lot of tightness. Maybe if this thing builds itself out a little more, potentially, but right now, no. Again, I mean, this looks decent, but it's just like, maybe it's kind of a bigger picture play, but it's not a great industry, and you know, it's not a great setup right now. It's just, you see how wide and loose and choppy it is. It already ran. It's already up. Again, most of these, like I said, you can just kick them out. As soon as you look at the chart, you should already say kick it out. Like Palantir, if you didn't get the gap here, there's really nothing to see. Like, what are you going to do? Chase it up here after it's already been up 3 or 4 to 5 days? That's a great way to get chopped around. This thing's starting to get loose and sloppy. It doesn't really have a base. You know, it's already up. It's already broken out. I mean, it looked like it tried to break out, but it's just right now. I mean, maybe if you had gotten in, but like even on this breakout here, like the volume was just nothing. Like this is just kind of a crap looking setup. This is like a deeper pullback. I mean, this is not an ideal look. It's got way too many down days. It hasn't really kind of based very long. This is the kind of situation I would pass because it doesn't have the right look. Needs, you know, a couple more T's, as Minervini would call it. I mean, this is starting to look decent, but it needs another day or two, you know, to kind of build this flag out. You know, nothing to see here. Yes, it is pulling back, but it's not really giving any sort of consolidation or flag. You know, maybe if this thing in a couple days can build this out. I mean, this had a nice gap on, you know, the thing is the float on this thing is enormous, and like you can see on the breakout, it was kind of like, So could this do something? Sure, but like that's starting to get into the realm of like, why? You know, you can see this thing's getting sloppy, kick it out. Sloppy action, kick it out. You know, nothing to see here. It hasn't really built out anything of a consolidation. Sloppy action. It's already up. It's already up. You know, if AMD can sort of build out here, then potentially. And you can see this flag. You see how it's getting tighter and tighter as it moves to the right of the pattern, and the volume is drying up. I mean, if this thing can break out, potentially a good trade. Nothing to see here. Nothing to see. Already up. Nothing to see. I mean, this is like wedging up over the last couple days. It's not exactly what you'd want to see. It's already up. It's already up. I mean, this is looking decently tight over the last few days. But, you know, again, like you have a gap here. This thing probably needs to let the 10-day catch up just a little bit and kind of base out a little bit more. Especially on these really high float stocks. I mean, these stocks don't typically just keep running and running and running. It takes a ton of buying pressure to make these things run. You know, so a lot of times these high float stocks, they'll have some kind of gap up, and then they don't really run that far after. That isn't always the case, but that typically tends to be the case, just based on the supply and demand dynamics of pushing this massive float up. You know, it's already expanded. You know, this, you know, might have been a decent breakout, but like you can see, the volume today was totally crap. So, I mean, maybe keep it on your list, but it's just today wasn't super great. You know, just sloppy action there. Already bought that one. Nothing to see here. It's just loose and wide and sloppy. This is sort of building something out, but again, like it's one of those situations where it's a very low ADR stock. You know, it's a trucking stock. It doesn't have anything in the way of like fundamentals. So yeah, you had this gap and you have this really short-term flag, but I wouldn't trade stuff like this unless it was maybe a tech stock or something that has just like gangbuster earnings, you know, just some blowout EP This is not a blowout EP. I probably don't have to look at this, but I can already tell. Like I can't imagine this was some blowout earnings report gap. Those are the ones that might be able to run, you know, after these really short-term kind of flags. But something like this, hell no. And again, like we're already dipping. This is the bottom of the barrel. Like we're already dipping in the 4% ADR range, and these stocks are just, you know, slow ass stocks to begin with. And again, this thing's already up. So you can see we had, what did we start with, like 80, 90 something stocks, and now we're down to the 13. And some of these were even iffy, you know, like, so if we go back through the list, we can kind of see some of the ones that we had flagged off. And even some of these are iffy, like we're just kind of scraping the bottom of the barrel on some of these stocks. Oh, this one already broke out. I don't know why that's still flagged. You know, there's some decent looking ones that give potential for tomorrow. A lot of these things are kind of like, eh. But that is also a good indication of there's just not a lot of good setups right now, which is another problem. You don't want to be taking suboptimal setups just for the sake of doing stuff. So I just wanted to do a quick video showing how to take just a broad, wide, sweeping list of stocks that meets general criteria, and just using, like I said, Stockbee's very, very basic criteria. Has a linear first leg up, and then it has a consolidation that has these sort of characteristics, and it's not 3 days up in a row. And I would say, you know, if it's up 3, 4, or 5 days in a row, like just immediately kick it out. If it's wide and sloppy and all over the place, kick it out. And then just using these two basic criteria, most stocks on any given day can immediately be eliminated, as you could see that I just did. So hit me up if you have any questions, and I'll talk to you guys soon.